The global currency markets woke up to a shock this morning as the Vietnamese Dong posted one of the most significant overnight movements in its recent history. Traders across Asia, Europe, and North America are scrambling to understand the cause and the potential long-term impact of this sudden change. The exchange rate shift is so sharp that it has already triggered volatility in regional Forex markets, with some platforms temporarily halting trades in the VND to manage liquidity and protect against further fluctuations. This is not a routine adjustment. It is the kind of movement that sends ripples through both domestic and international financial systems. Market participants report that late in the Asian trading session, the VND began to strengthen rapidly against the US dollar and other major currencies. Within hours, the rate appreciated far beyond the daily band that most analysts and even the State Bank of Vietnam had anticipated. The move came without any official announcement at first, fueling speculation of an imminent revaluation. The sudden jump prompted traders to monitor every data feed and social media post for clues, while large banks adjusted their internal models to accommodate the new reality. For exporters, importers, and those holding Vietnamese assets, this is a development that could radically alter profit forecasts and investment strategies in the weeks ahead. By early morning in Hanoi, the central bank issued a brief but decisive statement acknowledging the adjustment, referring to it as part of a broader policy review aimed at aligning the currency with what it called current macroeconomic fundamentals. While no specific figures were provided in the first release, subsequent data confirmed a notable upward repricing of the dong's value. This announcement, coming after hours of intense speculation, did little to calm the markets. Instead, it solidified expectations that the government may be moving toward a more aggressive currency policy, one that departs from the gradual adjustments of recent years. The timing of this move is raising eyebrows among economists. Vietnam has been enjoying steady GDP growth, robust foreign direct investment, and a strong export sector, particularly in manufacturing and electronics. However, inflationary pressures have been building, and global supply chain adjustments are shifting the competitive landscape. Strengthening the dong could be an effort to combat imported inflation, improve purchasing power for domestic consumers, and signal confidence in the economy's underlying health. Yet, it could also carry risks for export competitiveness, as a more expensive currency can make Vietnamese goods less attractive in global markets. Investors who had been holding large reserves of VND as a speculative play are now seeing massive gains on paper, but with those gains come decisions about whether to cash out now or hold in anticipation of further appreciation. Small-scale holders, including members of the Vietnamese diaspora and overseas workers sending remittances home, are also paying close attention, as the change directly affects the value of transfers and savings. Banks across the country are reporting unusually high volumes of inquiries this morning, with customers seeking updated exchange rates and clarification on how the new pricing will impact loans, mortgages, and deposit accounts. In the international sphere, analysts are drawing parallels to past revaluation events in other emerging markets, where sudden currency adjustments were used to send strong economic signals or to prepare for deeper integration into the global financial system. Some are pointing to Vietnam's expanding trade partnerships, recent free trade agreements, and its growing role as an alternative manufacturing hub to China as possible motivators for the timing. Others caution that without a full policy briefing from the State Bank and the Ministry of Finance, much of what is circulating remains speculation. The immediate reaction in the Forex markets has been sharp. Regional currencies, particularly in Southeast Asia, have seen minor spillover effects as traders reposition portfolios. The Thai baht, Malaysian ringgit, and Philippine peso all saw brief strengthening as risk appetite shifted. At the same time, the US dollar index experienced a mild pullback during the Asian session before stabilizing as European markets opened. Gold prices, often a safe haven in moments of currency volatility, edged higher overnight as some investors sought to hedge against uncertainty. Domestically, the sudden revaluation is likely to benefit Vietnamese consumers in the short term. Imported goods, from electronics to raw materials, will become cheaper relative to the stronger dong. Travel abroad will also be more affordable for Vietnamese citizens. However, export-oriented businesses could face a more challenging environment if the higher currency value persists, potentially leading to calls for government support measures or targeted subsidies for key sectors. The textile and garment industry, seafood exporters, and agricultural producers could be among the hardest hit if foreign buyers push for lower prices in light of the new exchange rate. For now, the central bank is maintaining a measured tone, emphasizing stability and gradual adjustment. Officials have not confirmed whether this revaluation marks the beginning of a larger policy shift or a one-time recalibration. What is clear is that the move has caught many market participants off guard, underscoring the difficulty of predicting currency policy in a rapidly evolving global economy. Financial institutions with exposure to Vietnam are already revising forecasts and preparing client briefings. Fund managers who invested in Vietnamese equities and bonds as part of an emerging market strategy will be closely monitoring the impact on company earnings, particularly in industries where currency fluctuations can significantly alter margins. Meanwhile, currency traders are bracing for further volatility in the days ahead, as the market tests the new range and searches for signals from Hanoi about the path forward. The political dimension cannot be ignored. Currency policy is often intertwined with broader economic strategy, and a move of this magnitude may have implications beyond the financial markets. Vietnam's trade partners, especially those with significant deficits or surpluses in bilateral trade, may reassess their positions. Some may view the revaluation as a sign of economic strength and stability, while others could see it as a potential obstacle to competitive exports. For ordinary citizens, the situation is unfolding in real time through news broadcasts, online discussions, and social media updates. Many are seeking to understand how the stronger dong will affect everything from the price of imported smartphones to the cost of fuel and groceries. The government is expected to provide more detailed guidance in the coming days, but until then, uncertainty remains a defining feature of the market's mood. What happens next will depend on several factors: the central bank's follow-up actions, the response of the business community, and the trajectory of global economic conditions. If this revaluation is part of a larger plan to gradually liberalize the currency and integrate more fully into international financial markets, it could be a sign of a transformative period ahead for Vietnam. On the other hand, if it is primarily a defensive move to address short-term imbalances, the effects could be more contained but still significant for both domestic and foreign stakeholders. As the trading day progresses, all eyes will remain on Hanoi for additional statements or policy measures. In the meantime, the Vietnamese Dong's overnight surge stands as a powerful reminder that in the interconnected world of modern finance, change can come swiftly and without warning. Whether this marks the beginning of a sustained upward trajectory or a brief but dramatic adjustment, the consequences will be felt far beyond Vietnam's borders. This development, while creating excitement and opportunity for some, also carries risks and uncertainties that should not be underestimated. Market participants are urged to proceed with caution, monitor official channels for updates, and be prepared for the possibility of further shifts in the days and weeks ahead. For now, the VND's revaluation remains the dominant story in the financial world, and its full implications will take time to unfold. This situation is developing, and while today's moves are based on confirmed market changes, the broader strategy behind them remains subject to change as official policy becomes clearer.